All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but come on, take a look at this. Look how messy this was today, man. It was insane, and it wasn't really about the reaction as much as what it was that Powell said. So we had an interesting trading day. I ended up having to take a loss. We made a little bit back by trading, and now I am holding some pretty big plays. We're going to go over all of that, but after what Powell said today, I am expecting that there is going to be probably 10 times more volatility, and really the end of the year is not going to be that simple, or at the very least, it's going to make the next month even crazier. But we got a lot to talk about. I got the breakdown for you what Powell did today. He was very ambiguous, and pretty much he acted like the CPI. He said he saw it coming. Even people after hours kept talking about how he left the door open to changing the 2% target. That's definitely way down the road, but everything about today, it had something for the bears, something for the bulls, but it's going to take us back to something familiar where the market may be super responsive as we get a bunch of data sets. So good news is you get one tomorrow, or that could be bad news depending how you look at it. So we got a breakdown. I have the recap for the day, the plays that we made, and then the plays for tomorrow. So drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, what happened today? I mean, maybe we should go a little to the market. You could see right when the release came out, it ended up being bearish, and I thought it would be bullish because of the CPI. Oh, was I wrong? But what ended up happening was the summary of economic projections. The terminal rate ended about 75 basis points higher than what the market was anticipating, and even the high end was supposed to be 5 or 4.8. Well, now the Fed is expecting something a lot larger. They even raised their unemployment targets and even said core PCE and even CPI was actually going to be rising. So overall, it was very bearish, and even if you looked at what the Fed was pricing in terms of GDP, it was borderline a recession, and this is what had people very negative there. And even when the press conference started, this was all pre-written statements, and we somehow dropped. There was a little bit of a challenging move here, and then on that little 2% thing, and then even as Powell said, we're getting close to restrictive. That's what kind of unleashed us here, but we did not do that good, and there was a lot of volatility, but I'm expecting we are going to see a lot more of this. So now that is your first key here. I'm telling you, Powell has just made the markets 10 times more volatile, and he has increased event risk across the board. So what I mean by this now is by Powell kind of playing both sides, where essentially he said we expected CPI to come down. We're not going to respond to these two drops just yet. Everybody on the Fed, the dot plots were almost unanimous in terms of being higher, which was a shocker, especially considering what Mr. Nick Timmerhouse tweeted the other day. Honestly, it's pretty wild, but my line of logic here is that Powell got himself out of this credibility box by saying, we saw this was going to happen. I think he preserved credibility, but every question, he didn't really provide new information. He gave you a little bit of bullishness and then matched it up with some more hawkishness. It was all even, and he said until the Fed is more confident. That's it. So whether inflation goes up or down, whether this does that, regardless of his targets, pretty much what Powell kept saying is that, hey, we need to be more confident, and that is something very hard to define, and the only thing that'll move us until then, it will be the data. And now we're going to go back to that time in this year where we start responding to the data very, very big. So that's why I believe this right now, and it was very interesting because, again, regardless of what the Fed futures or the bond futures have been pricing in, Powell and the Fed are they're nowhere near it. So somebody's going to be right, or somebody's calling the bluff, or maybe somebody's bluffing, but we are going to see. But that being said, now I think this sets us up. One end of the year is just going to be interesting considering tax selling and everything else in between, but also you're going to have to deal with now a whole nother month until we hear from Powell again. And now every single data set moving forward, That is what is going to be key. So we'll get into that one in a little bit. But now for your second key, like I'm saying, the summary of economic projections, it came in a lot more hawkish than expected. But even then, the market is still calling its bluff. You'll see when we get to the plays here, but in a weird way, the bonds are still holding up. And even if you go look at rate cut expectations for, like, I believe May or June, they are still down. People still expect it to cut, even though that's what the Fed or the Fed futures are pricing in. But the Fed's dot plot says, nah, we're not going to cut at all into 2023, and they don't see a cut till 2024. So pretty much the Fed is saying they're going to cut in 2024. The bond market is saying you are going to cut middle of next year. And, well, somebody is going to be wrong pretty much. But one thing that he didn't say was that the markets were too high. A lot of people kept reiterating this question, and they were asking him if financial conditions were too loose, and he kept responding with not really, and he said that they're finally seeing the reaction, and that could be good. But what I was saying today, and mind you, I am holding 2 negative NQs right now, 2 short NASDAQs, right? This opens up the door for the market to go a lot higher or a lot lower. Pretty much what I got out of this, and even the whole approach and the whole attitude from today's meeting, I personally believe that Powell does not care where the markets go from here, because he now has optionality by saying unemployment's going to be a little bit higher but not too high, by saying the Fed is going to keep holding and keep raising and not being responsive to the data, and then saying stuff that like he expects it from happening. He pretty much has optionality right now. No matter which way he goes, I think he's going to be able to play into it, and that's why I think he's not getting ahead of it, and he's just saying, well, hey, if it goes up, the data will probably bring it back down, and he could do his little speech if it goes too high, and then vice versa. If it goes too low, hopefully the data slowing down would be able to support the market. So this is why I'm saying it. Some people didn't like this take, but realistically, there's good and bad in this, and that's why I'm saying if the markets want to call the bluff and really rally, they can. If the market is going to drop off and say this is the most hawkish thing ever, they can. So this is where I think it gets interesting, and I really think Powell raised the stakes, kind of stepped away from guiding forward, and is going to let the data do his thing. But now he is in a position where he could do anything he wants moving forward, and I think that's a good place for Powell. But like I'm saying, it's a bad place for any of the traders in the markets, because that means the range of volatility is about to be higher. So with all that being said, now, like we said, data events are going to be key, and tomorrow morning now, you are going to get an initial jobless claims. Given if Powell was like more chill today and all of what happened today didn't happen, I would have expected this to not be that crazy, or maybe kind of flow in line with what we've been seeing. But I would even argue tomorrow might be the scale of another non-farm payrolls, where that jobs data, after what Powell said, maybe this is what it takes to see if the bond market catches up to the Fed, or if the bond market pulls away from the Fed expectations. But all of these things would require new pricing, and, well, the market is going to have to start pricing some new things in. So tomorrow morning, 1 hour before the bell, that is what we're going to be looking for. Then big option expiration on Friday, and then we'll see where we at. We'll see where we're at as we get into Christmas. Oh, I'm excited. Merry Christmas. But let us get into the plays. So right off the bat, we'll go over my plays here in a little bit, but I'm just going to start with the play I ended up holding here. And I really like this idea, and this is why I'm confident holding what it is. But I went short on the NASDAQ and then long on the bond. So none of this is a recommendation. I'm just showing you what I believe. Again, like yesterday, I thought it would be a bullish print. It wasn't, but you could always maneuver in and out. And I definitely now, after hearing Powell, I want to put this to the test at the very least. But essentially, the summary of economic projections, it was economically bearish. Some people even asked it. They said it's borderline pricing in a recession. And based on Powell and almost the entire Fed going way above where the futures or the bonds were pricing in, I think he doesn't care about what the bonds are pricing in. It's been a long time since we've seen such a large divergence, and now it's just getting even bigger between what the Fed says is going to happen and what the market says is going to happen. So with that being said, I think the bonds can do whatever they want. Same thing with the markets, but now if things get really bad in the next month or two or leading into 2023, if it gets worse and the bond market ends up being correct, or maybe it gets worse and keeps going, I think the bonds will get a bid. So if there's any real fear, I think the bonds will catch a bid, and that is going to be a good sign. But obviously, if the market comes down, the bonds may keep that correlation, the whole 2022 vibe, and it may come down with it. However, if the market rallies, I'm assuming that if the NASDAQ keeps bouncing and the market's like, no, we like this, and they want to really call the financial conditions bluff, then the bonds will play along with it, and the bonds should move again. That's word to the correlation. But now, what I like about it is that the bonds could hedge the NASDAQ short, even though I'm way bigger on the NASDAQ. So if you want to make this play, you could make it a lot smaller, and it's going to be a lot more comfortable. But also, it's a play that could be a double win. Essentially now, if the NASDAQ plummets and things get bad and then even fear goes up, well, we're going to win on the bonds and people getting a more imminent pivot or anything of that nature, or again, more fear, go buy the bonds, and then the NASDAQ comes down. So I really like this idea. I can't wait to see how it plays out, but high risk, high reward, my friend. So we'll see what happens. None of this is a recommendation, but that is play number one. Then play number two. This one's kind of simple. Uber, they've done nothing for a while, and all of a sudden it wanted to outperform today by 2%. So we've been hearing a lot about travel. There was a bunch of big downgrades on like Marriott and a couple of other of the travel plays today, which I thought was interesting, but Uber's kind of kicking into gear. I've held it for a long time. It hasn't done anything, so thought I'd put that on there, but that was one of the random share plays that actually ended up today. So keep your eyes on that one. And then finally, this is a word to Powell and what happened today, XLU. I've been bringing this up. It was rallying. It came down here a little bit today, but if this goes negative, I still think I have like $1.60 or $2 per share of gains on it. But if this goes negative, this is going to be a buy, but we're going to see what happens. But this whole environment of anything could happen, follow the data. XLU utilities, whether it's inflation, stagflation, pivot, no pivot, this just makes that theory a lot stronger. And the last time we were in this environment, these did very, very well. So I'm really liking the XLU. I don't want to get too crazy unless I could get it at a better deal than my first purchase, but I'm definitely going to be watching this one. But those are the main plays as far as what we did here today. It was a good day and a bad day. I mean, it could have been a lot worse. You'll see when we get to the balances, but I started off the day with the Pfizer flip. They had news related to like China and them actually using Paxlovid, so that was good. Only got $50 on it, and then I did make a NQ flip early in the morning. I got like a quick $200 on that one, and then as the report started to go out in the first minute of it, first 30 seconds, I went short at 11,920, and then I covered at 11,804, so I actually made like $2,000 off of this one, but then I had to close out the ES I was holding from yesterday. So if you remember that one, I was down like $3,000 on it yesterday. I was actually only down like $1,500 today, but then I pretty much ended up closing out for just about $4,000 loss as it started to drop. If I held this one, it could have been a little bit better, so that's what I kind of regretted. But either way, I mean, my interpretation of today was bearish, and one thing I'll say with the possibilities, I think you're going to get a lot of up and down, and what I think is that everybody will get their shot to take profits or for anything else to happen. So either way, I had a bullish tilt. I closed out of the ES. We're coming off the good profits there. And then this is where I made my mistake here. I added an ES here to the long side, and I was waiting even from after I closed that. Why I grabbed this ES, this was before the press conference 5 minutes prior. I thought there was going to be a little bit of a run-up, and that's why, surprisingly today, what you ended up seeing happen was a sell-off even on the pre-written statements. That usually hasn't happened there. So there eventually was a reversal there, but then at that point I was caught up in the other stuff. So as I closed out that other one, I waited a little bit and I ended up reshorting too. And this is where I made my mistake because I just went bigger. I wanted to go a little bit bigger. Again, I had the bearish tilt. My plan was to sell this one at the top, then go short on these again after I closed out the other one. But eventually, that was not going to be playing out how I expected it to. It did play out just a little bit more choppier. So what I ended up doing was shorting these, and these are what I'm holding. You'll see my average. I was down on it, but now this is what I like, and then I just kept adding to the bonds. I think I bought one. There had to be another ZN throughout the day. Oh, I guess I added yesterday, but now I'm pretty much holding 4 of the 10-year bonds, and then I have 2 NASDAQ shorts with 1 small insurance on the ES long. But the thing about the ES long, 2 NASDAQ shorts are going to move way, 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 way faster. So we're going to see what happens. Those were the main plays. As far as everything else, we'll get here. Wait, do you see it? Yeah, there it is. Here's what I'm holding. So here's the plus ES. I only have 1 of those. I'm up on it a little bit, $25, but remember I had to close out the other loss, and then I was able to get in a little bit lower, so not too bad from where I sold it. Pretty much the same position. And then I have the two NASDAQs there. Remember, 4,100 here is what I'm holding lost now. I did get to realize like $2,500 on it today, so that does help it out a little bit. Here's the bond play. So I'm hoping these two could even balance this out. But if you've ever seen these things move, man, they go crazy. But this is really the main bulk of what I'm going to be holding. And again, I want to see this bond and NASDAQ thing play out. Still in the Apple shares, down $5 per share, $500. Same thing with the old Disneys. These ones just really won't move. So we'll see. Tesla, I mean, he's getting boycotted, man. And then there's the Uber still. We've held this one for a while. And then XLU, 169. They're still like the Yang. And then again, the Activision. The Yang is down like 700. Where's the Activision? Where's Activision? Still down a little bit. Again, I flipped short after that one on the FTC news. And then I think that's pretty much it. Again, any other play, Qualcomm or whatever, I might be missing it. I mean, PRVB, y'all don't ask about this one. This one keeps killing it still. So still in that one and everything else. And then even like what, TSM to the upside. So any of those, nothing's really changed. All I did from here in the last couple days is more bonds, short on the NASDAQ. And then we'll see how these balance out. And I'm sure it's going to be crazy, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, are you a builder or are you a breaker? Do you stay around builders? Do you stay around breakers? What are you going to do with your opportunity, Chad? And I know you're a builder. That's why you're listening. That's why you made it this far. Even if you got a little bit of side eye in your heart, why did you listen this far? It's because you're a builder, baby. So let's go. Let's keep building. Take this into the end of the year, man. And again, we had a lot of practice for 2022. We're going to get something familiar to start it out with. There's going to be more volatility, but you are ready. You have learned from it, and just get ready. And there's going to be Merry Christmas. Merry what? Okay, but drink the water, stay hydrated, stay healthy. I love you, Chad. I'll see you in the morning. Get ready for the data, and let's close it out with a big options expiration. But I love you. God bless all of you, and thank you guys again. And that's it. Horn.